Hello everybody. So this video is entitled MSTR stock, a 1.5 billion convertible bond buyback, and they executed this buy and they generated $120 million worth of gain, thereby validating that idea. Now, this is an idea that they had previously informed us about last week, so we knew this was going to happen. The specificity of this announcement is to let us know that it is complete. It is completed, and so a press release is what is needed here. SEC rules work in mysterious ways, but they completed the buyback, and so that's the main takeaway here. What's another important takeaway? Where did the money come from? The money came from the reserve, from the cash reserve. They reduced the cash reserve from 2 billion and change to 871 million in order to do that buyback, and that generated a BTC yield of 0.7%. This is the new info. This is a pretty big deal, and if you go look at, of course, the converts, you can see the 2029 convert has been halved, minus 50% compared to what it used to be, and they reduced the total number of convertible notes from 8.2 billion to 6.7 billion. So that's a big change. Why is this a big deal? Because the converts sit at the top of the capital structure in case of a bankruptcy, and they make the creditworthiness of Stretch less high. The more converts you have, the less the creditworthiness of Stretch is going to be. If you want to increase the creditworthiness of Stretch as seen via the BTC rating, you need to remove these $6.7 billion left right now. These $6.7 billion left right now. You need to remove them from the capital structure because these show a super high BTC rating. The BTC rating on these is for some of them in like the 80s or the 90x, right? For Stretch, we're nearly a 4x, and Stretch, we want to increase the BTC rating, because the better the BTC rating, i.e. how much cash actually backs the instrument, the more the cash backs the instrument, the more demand there will be for that yield, and the more Sailor will be able to lower the coupon, But you can see that folks are already complaining. Twitter is a loud place, and you have folks complaining that he drained their cash reserve from 2.2 billion to 871 million. I want to point out that folks complaining about that are just one side of the story, and the other side of the story is the price action. Look at the price action. Today, MSTR is actually outperforming Bitcoin by more than normal. That tells me that the market likes this move. And to the people who are sad about the cash reserve being gone, I followed this stock, every day for the past 5 months since they actually, when did they add the cash reserve? Was it 6 months ago? Anyways, every day I follow this stock for years now, but since they added the cash reserve, ask yourself, did the cash reserve actually help? Right? It didn't prevent us from depegging during the macro madness of March. Right, it didn't prevent the stock price to crater back in March. So were we actually getting a lot of credit from the market from having $2.2 billion of cash just sitting there? I could argue no, we weren't getting that much credit for it. And so in a typical Sailor/MSTR fashion, it's all about trial and error. It seems like the cash reserve was not providing the benefits that they anticipated, so they decided to just remove the cash reserve and buy back the converts. And that's probably the better move, because that Sailor does not want to own cash. He has no interest in owning cash, and I think also he has no interest in selling Bitcoin. Some people were thinking he would sell Bitcoin to buy back the converts. Nope. He sacrificed the cash reserve. I happen to believe that is a good thing, because MSTR common shares are always going to be super liquid, and even the over preferreds are liquid, right? A lot of people would be happy to buy the over preferreds. Only Stretch cannot be issued when we trade at around under 100. And we're still trading at around under 100. This morning, breaking past 99.50. I think at this point, this is okay. At this point, this is normal. Yes, this takes slower than anticipated. But remember, the 2 to 3 days right before we go ex-dividend are so crazy that they make up for like 2 weeks of trading at 99.50. They more than make up for it. And Bitcoin, unfortunately, is still weak. Bitcoin at 76,400. We still have a weak Bitcoin. The markets are rebounding across the board, but Bitcoin is still weak, still forgotten, still manipulated, still, in my view, in a deep value territory. As soon as we get Clarity Act, a lot of these wash sells, a lot of this manipulation from centralized exchanges, a lot of it's going to stop as soon as we get the Clarity Act, and that's when I want to be repositioned. That's when I want to own the stock, right? When I look at a stock like Micron, now being worth $1 billion, I tell myself I'm so happy owning Bitcoin, because there's a lot of AI moves that are too fast right now, in my view. Anyways, that's just me. Fear and greed, we're in fear at 38. That's unfortunate. I wish we had stayed neutral. We're back in fear. That's why Bitcoin is at this level. And then the question, of course, is it price that drives fear and greed, or is it the opposite, right? Maybe price just drives fear and greed. Price creates fear. Maybe it's the other way around, right? Maybe it's that it's not fear that creates the price, it's the price that creates the fear. So the price makes the narrative, as we say, right? Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.